The only matter that's off the table is taking a pass on it. We've got to act. Senator Cornyn, you're next.
Good morning, Madam Secretary. When you testified before this committee almost 2 years ago, you were asked whether inflation was transitory. And you told the committee that you saw important transitory influences at work, but you did not anticipate that inflation would be in any way permanent. You predicted our economy was on track to get back to more normal operation and that inflation would decline over time, something we all hoped for. To be fair, you weren't the only person who forecast transitory inflation. The chairman of the Federal Reserve, Jay Powell, did the same, as did the President of the United States. We now know that inflation rose to a level not seen in more than 40 years, and that inflation accelerated, particularly following the enactment of the partisan American Rescue Plan Act in 2021, and then with the so-called Inflation Reduction Act in 2022, which together added $2.6 trillion to our national debt. Obviously, all this stimulus going into a constrained economy with supply chains the way they were, workforce levels down, obviously created, was like pouring gasoline on the inflation fire. And though inflation has now come down to 6% or so, that's hardly good news to my constituents who are still struggling to keep up with rising costs. We know both record housing costs, which we've talked about a little bit here today, and high grocery bills are squeezing consumers all across the country. And to make matters worse, real average hourly earnings, the cash earnings of all workers, adjusted for inflation, declined last month and are down over the last year. In other words, because of inflation, workers have gotten a pay cut. Well, first we saw high inflation and then higher interest rates, of course, and that brings me to the failure of the Silicon Valley Bank and another bank in this last week. Some have suggested that this was an example of mismanagement at a time of higher interest rates and higher inflation. Others are saying, where are the regulators? Were they asleep at the wheel? Many have suggested that banking regulators need to focus more on regulating banks, protecting depositors and taxpayers, instead of straying off course and examining so-called climate-related risks and other social engineering goals.
Hello, friends. Happy Sunday to all of you. I have big news for all Social Security, SSI, and Medicare beneficiaries. Congress is meeting right now to debate over key programs, and several lawmakers are pushing to raise the retirement age, and this could lead to cutting monthly benefits for millions of Americans that are already recipients. Dear friends, please make sure that you watch until the end of this video, especially if you are a senior or a retiree. This coming Friday, I will be announcing 2 winners for the Walmart gift card giveaway. If you'd like to enter the weekly giveaway, friends, all you have to do is click and like several of my videos, and then comment below the keyword of each video that you watch. My friends, the more videos that you comment on, the greater your chances of winning the weekly giveaways. 62, 65, 67, and 70 are all ages that are important when it comes to Social Security and Medicare. And these ages are also targets in the contentious debate over how to shore up the shaky finances of the massive entitlement programs. Republican presidential candidate Nikki Haley recently zeroed in on raising the retirement age for Americans in their 20s as a way to reform Social Security, stating it should match their life expectancy. The controversial position was echoed by GOP Representative Nancy Mace of South Carolina on CNN's State of the Union last Sunday. Neither said what the new retirement age should be, but many folks think that people can start collecting their full Social Security benefits at age 65, which was a retirement age for decades. But Congress changed that as part of its 1983 overhaul of the entitlement program. Lawmakers gradually increased the full retirement age. The first to be affected were people who turned 65 in 2003. Americans born in 1960 or later must wait until they turn 67 to collect their full benefits. However, unless Congress acts soon, neither Medicare nor Social Security will be able to provide their full benefits within the next decade or so. Social Security's trustees said last year that the program's combined retirement and disability trust funds will be depleted in the year 2035, at which time Social Security will only take enough income to pay 80% of scheduled benefits. A more recent forecast by the Congressional Budget Office pegged the date at 2032 for the depletion of the Retirement Trust Fund. Meanwhile, Medicare's trustees said last year that its hospital insurance trust fund, known as Medicare Part A, would drain its assets by the year 2028. At that time, it will only be able to pay 90% of benefits. The Congressional Budget Office put the date at 2033. The retiring of baby boomers has placed a lot of stress on both programs. As the U.S. population ages, there are fewer workers paying into the programs and supporting the ballooning number of beneficiaries who are also living longer. In all, nearly 66 million retired workers, their dependents and survivors, disabled workers and their dependents, receive monthly Social Security payments. For millions of retirees, the benefits make up the bulk of their income in their older years. And right now, more than 65 million senior citizens and people with disabilities are currently enrolled in Medicare. Proposals to increase the retirement age typically focus on when people should be able to collect their full benefits, though some plans also float bumping up the ages for early retirement and Medicare eligibility. Proponents argue that Americans are living longer and should be able to remain employed much longer. Opponents say that some workers, especially those in physically taxing jobs, need to have the option to retire at earlier ages. Alicia Munnell, the director of the Center for Retirement Research at Boston College, has recently told reporters, increasing Social Security's retirement age is a cut in benefits. However, people couch their support of this method to strengthen the program. So delaying retirement benefits is a hot-button topic, not only in the United States, but in Europe as well. The French government is currently forcing through controversial plans to raise a country's retirement age from 62 to 64 years old, which have ignited weeks of criticisms. So dear friends, what are your thoughts about our government raising the retirement age? Please let me know what your thoughts are in the comment section below. Americans can file for Social Security benefits as early as age 62, but that will result in a lifetime reduction in payments. For instance, those whose full retirement age is 67 will only receive 70% of benefits if they claim it at age 62. If the full retirement age is increased, it could even mean larger cut in benefits, depending on how the legislation is written. Fewer people are filing for early retirement benefits. Some 25% elected to do so in 2021. That is down from 52% in 2005. Those who delay their retirement until age 70 will receive a larger monthly Social Security benefit, and that's thanks to a credit that Congress created in 1972. However, waiting beyond that age will not further increase their monthly payments, so the Social Security Administration recommends that individuals apply when they hit the age of 70, even if they are still working. Well, my awesome and most dearest friends, that is the end of my daily stimulus update video for this Sunday. Thank you so much, friends, for being part of this community and for being here every single day. My friends, if you'd like to enter the weekly Walmart gift card giveaway, all you have to do is click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, my friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed weekend.